Good morning, everybody, and welcome to Traders Espresso for the morning of Wednesday, March 14th, 2018, and I'm back after a couple days hiatus. Let's just get right to it. Markets were, so U.S. equity indices were down yesterday after having put together some fairly good days in a row. As you can see here, this is the daily chart of the S&P. Solid upward move here, and then a down, kind of a promising looking day on Monday, but then some softness. Yesterday was the same thing, promising, yesterday being Tuesday was the same thing, promising day, positive start to the markets, and then things just kind of deteriorated. It may have something to do, in part at least, with some of the shuffling in the Trump administration. Rex Tillerson is out. Trump just announced by tweet that he was being replaced by Mike Pompeo, who's the current CIA director. So that turmoil may have spooked investors a little bit. It was also blamed for kind of some of the softness overseas. Asian markets didn't take it so well. Asian equity indices closed the day down. The European indices are actually looking positive right now, around 0.3%, not around there, but basically all green across the board. U.S. equity indices today are pointing to a decent start, all up anywhere between 0.2% and about 1/3 of 1%. VIX was elevated yesterday in the 7, 8, 9% range. The yield on the 10-year note is currently up today. It's 2.852 is the yield. The dollar's up almost 0.2%. One thing that's interesting is there was an auction yesterday on the 30-year bond, and the yield was actually lower than the last. I think they let these auctions every month or so. The yield was actually lower than it was at the previous auction. So what that points to is the potential for a flattening to inverted yield curve, with rates rising at the short end of the curve and rates falling potentially at the long end of the curve. The curve is doing this kind of thing where it's flattening. So this is the long end over here. So that's pointing to a potential for that. I was reading a Fed study recently that showed that pretty much without exception, every inversion of the yield curve led to a recession. So, it's widely held that a inverted yield curve portends a recession, and a flattening yield curve potentially portends a inverted yield curve. So keep an eye on rates, especially at the long end. If rates at the short end continue to go up and rates at the long end continue to fall or stay steady, they don't necessarily have to stay steady, but if there is a flight to safety to treasuries, which oftentimes there was yesterday, and it looks like there might be a slightly one today, because remember, as bond prices rise, yields fall. So if there's more demand for U.S. treasuries, especially at the longer end, you're gonna see prices go up. You're gonna see yields fall, because those two are inversely related to each other. Another little tidbit: retail sales came out this morning. They were softer than expected. Retail sales month over month, pulling automobiles out, was up 0.2%, and the consensus was 0.4%. Retail sales overall, and this is again as a month over month number, were expected to go up 0.3%, and they came out down 0.1%. We also have business inventories. We have that number coming out at 10 o'clock Eastern. So that will be another kind of a red, another data point to be looking at. And then we have EIA crude inventories come out at 10 o'clock Eastern. So a little bit of data today. It hasn't been a real data heavy week. Kind of the tail end of last week didn't have a lot of data coming out either. So a lot of this was driven by headlines. You saw the headlines yesterday driving the market with the announcement of Rex Tillerson being fired. That did affect markets. So we'll see what headlines come out today, if any. But right now, it looks like the bias is to the long side. I would not be surprised if this is another day where the market starts out not strong, because it's not starting out strong, but another day where the market starts out decent and it fades towards the end of the day and it winds up being another down day. I wouldn't be surprised about that at all. I'm still targeting, despite the strength that we've seen in the markets recently, volatility is still elevated. The VIX is at 16. The RVX, which is the volatility on the small caps, is also at 16. So this is all this volatility that we're seeing here. The NASDAQ was able to retake its all-time high. So far, the S&P, the Russell, and the Dow Jones have not done that. The NASDAQ and the NASDAQ Composite, both were able to exceed their all-time highs. And I don't have it drawn on this chart. I might have it drawn on the Composite. But it did off. The NASDAQ and the NASDAQ Composite both did back off. So they're still, above that previous high that was set, right here on January 26th. But they are pulling back, as did all markets yesterday. So having said that, should be an interesting trading day today. As always, especially in this kind of an environment, stay nimble, stay flexible, stay cautious. And, I think that today might be the kind of day where you just get a feel for the markets at the start and kind of get a feel for if moves last or if they peter out a bit. Because if that's the case, then you're going to want, if you're in a trade, you're going to want to take profits before it turns against you. I saw that a lot yesterday when I was trading. So good luck, and we'll catch you on the live stream. Thanks for checking.